Hello and welcome to NDTV Profit. We are at the JP Morgan's India Investors Summit, and with me is Latika Chopra, who is the head for India Consumer Research. Latika, thank you very much for joining us on NDTV Profit. My first question, the good big debate going on about urban demand. After the first quarter numbers, in this some chatter going on that urban demand is now slowing, and while rural has picked up. What is your take on that?
Yeah, first of all, thank you for having me on the show. So as far as the staples, demand pattern is concerned, clearly we have started to see a revival in rural to some extent. It's a gradual recovery. How durable it's going to be, what is the quantum of pace of recovery, we'll wait and watch for the coming months to give us enough data points to determine the pace. But rural has started to catch up with urban. But on urban FMCG, I think trends so far have been fairly, resilient and stable. Of course, we keep coming across some bit of a narrative. Is there an incremental risk to this, considering the food inflation that we have seen? And if you switch on to some of the discretionary segments, and we have seen for a while, the low ticket size urban discretionary demand has been under pressure. Whether it is QSR, whether it is small appliances, whether it's the paint sector, we've seen some of those demand patterns being under a bit of pressure. Of course, there will be some nuances around, for example, with a very hot summer last quarter, and that kind of helped the growth for, certain categories on air conditioning and fan side. But again, one has to see how the income wage growth levels behave for the urban demand to really play out. But for now, what we do sense is that rural is something which is, improving for sure. Urban is holding out, and the upcoming few months will be crucial. One, we will have some more color on how the harvest of crop looks like. We'll also have some color on how festive demand is going to really play out. What is the sentiment? Our preference at this point within the broader consumption segment is for staples, over discretionary. And that's built up on the narrative of improving rural demand.
All right. Like you mentioned that we are seeing a shift in demand. I also want to understand from a consumer perspective. There's a key trend which is going on. There's a shift in terms of consumer preferences. So I want to understand that is there actually a trend that is going on, and whether companies are able to adapt to this, change in consumer preferences.
Sure. Yes, this incrementally consumer is all the more ever aware, all the more demanding, all the more open to experiments with brands and formats. So clearly, yes, we are seeing key changes in the consumption landscape from a consumer perspective. Some of the big preference changes that I could talk about, one is clearly the shopping format, right? How we are shopping, particularly in the larger metros and tier 1 cities, there's a very rapid shift towards, online channels, and with the advent of quick commerce, this is a very clear shift. So today, if you look at any FMCG company, I'm talking about the leading FMCG companies, I would say nearly 20 to 25% of their revenues are now coming only from these modern trade and online channels, including quick commerce. So this is one big shift of consumers seeking more convenience and delivery at home that we are seeing. The second trend that we continue to see is premiumization. The aspiration to consume and premium products, uptrade, is fairly resilient. This is a pretty structural tailwind, if I may say so, for the sector. And we also see companies reacting to this, right? So companies are also, we have this monthly tracker, we track what are the new launches in FMCG sector, and we continuously see that the pace of innovation has stepped up. But more importantly, we are seeing more and more launches in this premium end of the consumer landscape. The other trend that we are witnessing is formalization of a lot of consumer categories, which actually applies both on staples and discretionary side. Whether you see it in the QSR space, whether you see it in basic staples, consumers are preferring, packaged foods over loose staples. People are preferring brands versus non-brands. So, this is a very material shift that's happening. And then, of course, we have some of the, other factors like growing out of home consumption, on-the-go consumption. We are seeing, consumers choosing for more healthier products per se. So these are some of the other nuances. How are companies looking at it? I think one is the innovation aspect that I talked about, right? Having the right formats. The second is distribution, aligning their investments to be more agile about the new age channels, and it's just not about being present on a e-commerce or a quick commerce channel, but kind of tailoring their products and SKUs also, which probably make more unit economic sense on these channels. So we continue to see that. And another aspect, what companies are obviously trying to do is capability build up, in terms of talent, getting more digital and technology skill set, more supply chain agility. Some of these are the other nuances or other aspects that we keep coming across.
Are you seeing a trend where the quick commerce is taking away share from the e-commerce?
See, I think quick commerce is, of course, right now, pretty much, over the last 2-3 years has emerged and has been disrupting the broader retail industry. It's definitely, taking share from everybody, whether it's modern trade, whether it's regular e-commerce, whether it is traditional trade, right? So I think they are focused right now on densely populated catchment areas. So yes, they are taking share away, but we have to keep thinking of the broader grocery retail market. That's wide. And, at an all India level, maybe that's less than 10% of the overall market. Some of the larger cities, it could already be like 25-30% salience. So I think there is space for every channel to grow. And our view is that, value retail, organized value retail, and quick commerce, will all coexist. But yes, you will have some parts of these tier 1 metro cities which are seeing rapid adoption of quick commerce. And then, of course, the plethora of categories also in these channels is increasing.
I'm saying that because we're seeing high value transactions also happening in quick commerce, which was earlier limited to e-commerce. So do you see that as a big challenge to the e-commerce players in that sense?
See, within the sector coverage that I have, clearly we've started to see more beauty and personal care portfolios being, provided on these channels. Earlier, just basic top-up purchases, we are, this segment is also starting to see more discretionary purchases being also made. So to that extent, you're right. Now, this is also still early years of, evolution for this channel, but I guess companies incrementally are more and more open to experiment, different kind of products on these channels. And then, of course, somewhere one would, both the quick commerce companies and the FMCG companies at some point will determine, what makes, sense from a profitability perspective as well.
Right. So now I want to understand that with the kind of inflationary pressure that these FMCG companies are already having on their margins, I understand that these FMCG companies are taking price hikes every now and then, but do you think that these price hikes are sustainable? Because, the pressure on margins will continue going forward.
Yeah. So, see, first to look at the FMCG part of the business, actually this space saw significant price increases, after pandemic due to variety of macro factors. And then we went through a period of deflation, actually. Rather, as we speak, I think companies have just started to initiate some price increases. So after 1.5 years of deflation, we're actually coming back to a bit of inflation. And we're probably moving back to more nominal inflation. Okay, so I'm not extraordinarily worried about inflationary trends at present, because if you see, crude behavior has been a little more benign, agri inflation is a bit more higher. But in a way, broadly, as we stand today, we for now see a need to take, low to mid-single digit price hikes. Of course, there will be different segment-wise, category-wise nuances, but we do not anticipate a very hyperinflationary period. And to that extent, I think companies will be able to mitigate these incremental cost pressures. And of course, over the last 2 years, companies have also invested a lot behind advertising and marketing. And hence, we do anticipate, their margin structure should remain stable or probably witness modest expansion in certain companies. I think the good part of, strategic approach that we are seeing from companies is that they're actually focused a lot more on driving innovation, driving top line. They are becoming, adapting or aligning their business models to these changing preferences that we talked about, and are not so focused on driving margin expansion. I think they're more focused on driving the top line growth. And I think that will be a bigger driver of earnings growth, for the sector going forward.
So you think the volume growth may come back in that sense? If given the fact that you're looking at nominal price hikes, will volume be back?
Yeah, so for the staples pack, we broadly think that, the sector was kind of delivering flat to low single digit volume growth in the first half of this fiscal. Yeah. We do think this will gravitate more gradually by, towards mid single digit in the second half. and pricing, which was kind of missing, pricing growth element was missing so far, we'd also start to see a kind of, low single digit kind of pricing. So overall revenue growth will actually benefit both from a gradual volume recovery and a bit of pricing coming through, and margin should largely hold out, for the sector with some modest expansion for some of the companies.
Right. And what, in your opinion, do you think can disrupt, the market for these major FMCG leaders? Because I was reading a very interesting note where urban consumption is now happening in the quick commerce and e-commerce space. So, what are the kind of, trends you're observing there?
Yeah, no, taking cue from what you said, clearly, there are two key disruptions that, the sector is seeing. And these drive, different kind of responses. But first and foremost is distribution-led disruption, and the other is innovation-led disruption. And sometimes these both merge.
Yeah.
And you have seen, how some of the new age brands kind of come up, and they've basically leveraged both these aspects very smartly. So these are the two kinds of disruptions that, I think the sector or the new brands have used, to enter the market and scale their presence. Clearly, the entry barriers for the sector have reduced, thanks to your ability to reach out to consumers, marketing, advertising, using the new social platforms, digital platforms is another aspect, how quickly you can now reach to the consumer and drive, experiment for your brand or your product. So clearly, distribution-led disruption and innovation disruption are the two things, that we keep thinking about.
Do you look at SKU consolidation in this phase?
Okay, that's a good question. I think companies who operate at scale have to be mindful of profitability and scalability as well, right? Now, on one end, obviously there is a need to drive innovation. There's a need to be present in relevant high growth categories, keep bringing new products as per the changing consumer preferences. But at the same time, I think companies are also very agile to get rid of what's not working. So the need for quick innovation is there, but at the same time, there's even a quicker need to keep reviewing your portfolio. So we sense that companies are also these days very willingly okay to let go of a product if it's not worked for 6 months, 12 months, or a year, whatever those internal benchmarks are. So I think from an SKU perspective, though it appears to us that things are expanding, but at the same time there will be a tail which will also be getting removed at the same time.
Because what we've seen in the new mode of distribution, whether it's quick commerce or any other mode of distribution which is there, we are seeing higher SKU sizes coming into play because that helps the unit economics for them. So in that sense, that's my question was with respect to that.
So SKU mix has always varied across channels. Like FMCG companies have kind of worked with very large SKUs for modern trade anyway in the past. Yes. What has probably come as a surprise to people on some of these new e-commerce or quick commerce channels is that even the larger side SKUs are actually working well, right? Because earlier one used to think this is more a top-up kind of a purchase, but if you look at it from a consumer angle, I'm able to get heavy packs of products get delivered at my home, at basically less fees or no fees in some cases. So I think companies will have SKUs of all sizes and formats, and that's been there for a while, because you've tailored your SKUs for a Kirana store. You've sold SKUs at 2 rupees, 5 rupees and 10 rupees, and you've tailored it for the big box retailers as well.
Right. Now, specifically for staple companies, there are, global giants when it comes to staple names, and there are some local names also where we've seen that growth is much better than these, global companies overall in terms of volume as well as, revenue and profits overall. Yeah. So what do you think? Do you think these global companies have kind of slowed down when it comes to, the kind of revenue growth that they had? Or do you think that the local companies are taking over the overall global firms or the companies?
Okay, so I think how a company's growth prospects also depend on what is the scale and size of the company and what categories they're present in. I think what you're talking about, the nuances of global companies, could be very well applicable to some of the large domestic companies as well. And to your point, I think some of the large global MNC companies in India have been there in India for decades. So they're as Indian in terms of operations, they hire local talent pool, they understand the nuances of the of the industry also fairly well. I think this is probably a question of being a larger company where, their things have been running in a certain way. And then you see disruption from some of the local players. It could be MNC, and in our case, in recent years, we've seen it's more of domestic companies who kind of tap into these white spaces, right? And you can innovate using these new age channels at a less, you can introduce multiple products. Your rate of experimentation is faster, and they have been able to do that at their scale and have led to some disruption. And of course, I think what global MNCs have been trying to do, of course, is obviously this has been this kind of a trend has forced them to revisit, their product strategy, more actively. And of course, but what we have noticed over the years is that in most cases, we have seen the decision-making process gravitating more towards, the local teams present here. And at the same time, I think they do benefit from the fact that they have access to this whole global R&D pool, right? They understand the global trends better in terms of channel disruptions. There is a whole supply chain R&D piece that they can tap into. So there are positives and things to work on, but I think your question is as valid for a large domestic Indian company as it is valid for a large global MNC who need to be mindful of newer competition, which is, coming up and probably is tapping into those local nuances a lot better.
Are you looking at, do you see local companies having better professional management now, investing more in R&D and innovation, and as you said, local knowledge is anyways there with them, but they've been able to use those or leverage them much better to get into that market and gain market share?
Okay, obviously this varies from case to case, but yes, at a by and large, we are seeing them adopting better practices, best practices, and trying to, build their presence. Obviously, professionalizing the management, hiring the right talent pool. We have seen a spate of listings, across sectors. I think all of that basically helps them to, gravitate towards becoming, more robust on some of these practices. Yeah.
Right. And in terms of QSR, how do you see QSRs from a long-term perspective? Because from what I understand is that their growth has been in low single digits, and the guidance in terms of store expansion is pretty ambitious. But from what I understand is that while they're expanding their stores, their area per square feet is, I think, coming down. So what is the kind of trends you're observing there?
Yeah, sure. See, I think there's no doubt that, the long-term attractiveness of the category stays. Food services is a $50 billion plus market, and within then the organized piece is much lesser. The overall QSR industry will be like $5 billion or so, right? So if you look at some of the trends, whether it's growing urbanization, younger demographics, everybody's looking for hygienic food, tastier food, convenience, and all of that. So, clearly this category has, legs to grow. Of course, you rightly said this segment has faced a lot of challenges, and of course, there has been actually negative same-store comps, yes, actually, for a while now. And then that's been on account of, I think, a couple of things. One is, pricing and inflation that we earlier talked about, and companies did take a lot of price increases and whole value for money positioning got impacted. The second bit has been, on pace of store additions that you alluded to. Yes, after pandemic, people thought, organize is the way forward, and everybody went ahead and opened a lot of new stores. And that also kind of weighed down on comps to some extent. And the third, of course, is, the whole delivery shift. Delivery, yes, has been kind of outpacing dine-in. Now clearly, I think how companies are responding to this, one is to get the value equation right. We have seen most of the QSR companies now trying to bring more value offerings in the portfolio, whether it is, a 99 rupee meals are very famous, or a combo meals of 149 rupees are famous. And there's a lot of price point advertising that you're seeing as well coming from them, right? So that's the idea, is to tell the consumer, come into the store or order from us, and, we are the right value for money. And this has actually led to an improvement or a sequential improvement in transaction volumes, right? Which is encouraging. The second thing that, on your point on store additions, I think, yes, of course, you have to be ambitious when you're talking about operating in a country like India, but they're very incrementally more mindful or more calibrated about new store additions. So it's not that they have taken most of the companies have taken a relook on how they want to add stores. So maybe they still want to add more stores, but they are more mindful of where to open. Should we open them in newer territories, where there is very less penetration, rather than culling down the same store sales growth, right? So they are taking those decisions. And again, as I alluded to in the staples narrative, I think here also it's pretty visible. Companies are not chasing margins. They're quite okay for margins to be protected, but the whole focus is how should we get consumer footfall back and drive that. Now, we think, first half of FY25 probably should have seen the bottoming out of QSR comps, and we should see an improvement in the second half. Yeah. And again, this is a space where we are relatively, more positive. Clearly, the sector has not done well.
Yeah.
But once we start some of these trends, reversing, hopefully, we should see the sector performance also coming back.
Are you seeing some kind of disruption in this model because of the cloud format, cloud kitchens coming into, and companies looking at cloud, because food delivery tech is also now emerging as one big way of distribution of food and all?
No, absolutely. So I think food aggregators kind of took a part of this overall food services market.
Yeah.
So definitely, that's very structural, and that's going to remain. I think what the companies have learned, I think two things. One is their partnership with these aggregators has been more inclusive, and they have definitely been investing more to remain and gain more share on these platforms. But they are also mindful that delivery is going to remain a structural piece and probably keep on increasing. And hence we find certain companies are now actually investing in scaling up their own tech platforms, own digital app platforms, own delivery capabilities, right? So in a way, they want not just to be the plain vanilla QSR companies, but also want to be somewhere on the verge of becoming a food tech player. We'll see how it goes. It's still early days. Barring one or two companies, there is a lot more that other companies need to do. But you are right. This is something that you cannot avoid.
Because we heard about super apps, and we consolidation of demand coming through that, but that never took off for some reason. Now many companies trying their own apps and all delivery channels, and consumer has his own way of limited space. Let's put it there on the mobile for them. So does it really work for companies to do it, or
it will work for companies who have scale. You need supply, right? If you have to meet demand.
Yeah.
Right. So it will not necessarily work for everyone, but it could work for companies with scale, and that's where the whole store edition and all those things come through. And the second piece is also on what you were alluding to, lesser store area, is also because incrementally stores are more delivery biased as well, right?
Yeah.
And the second piece is you cannot take away the importance of being present on aggregators. You have to, compete on these platforms to become leaders in your own category. Again, looking at the broad picture, there is a big formalization opportunity sitting here. If you're offering the right product at the right price point, and you're competing enough on the aggregators, why won't aggregators want to have you? Because some of these chains would have the largest available supply in a very consistent manner available to you. So I think it's more a partnership model than, competing against them.
No, Latika, sitting in a city like Mumbai, our view is very skewed for large cities. How do you see this kind of trend, percolating into tier 2 and tier 3?
See, if you see, narrative of most e-commerce companies, I think they're not denying the opportunity which is sitting in tier 2, tier 3, right? So these digital models will be fairly irrelevant even in those markets. Of course, supply has to catch up, in those spaces. But again, all the more need, for the larger aggregator platforms to be in partnership with these larger brands who are actually the first ones to enter some of these tier 2, tier 3 cities. And if you look at the expansion plan agenda for most of the QSR chains, you will find that's being more tilted towards some of these smaller cities, incrementally.
Right. And, Latika, overall, with the upcoming festivities, how do you think that these will impact the overall FMCG space? Not just FMCG, but, it includes retail, QSR, everything.
See, as we speak, of course, everybody hopes for a good festive. So we are hoping, there's going to be a sequential pickup. How much of that will really come through, we are yet to, we are going to see it in the peak months of festive, which is October and November. I think companies are quite hopeful. They've prepared well in advance to cater to the sequential increase in demand. Sectors like jewelry, paints, durables, and even alcoholic beverages, I think, are the key ones, which stand to benefit if we see a good festive.
And sectors or segments which will be lagging behind?
See, again, a very, very broad question. There's that.
I'm not asking specific because you won't be able to answer. But yeah, your take on it.
See, again, as I said earlier, at this point, we have started to see, some evidence of a gradual rural recovery, and hence, our bias has been a bit more on staples versus discretionary. There will be these tactical nuances that one can play depending on, how the festive goes and not. But that's all, I would say without getting into any specific names. Yeah.
Latika, it was a pleasure talking to you today.
Thank you
Thank
so
you very
much
much for joining us on NDTV Profit.
Thank you.